Good evening, traders. I hope you are having a wonderful time or a wonderful evening or morning, wherever you are. So, today I want to go through the week's setups or the trades, how the week played out due to some inquiries or some people asking from the WhatsApp group. Now, I'll just go over quickly what I usually look for. So I'll just write over here. The first thing I always look for in a market is signal days. Signal days, and under signal days, I may look for first green day. Let me just write in short: first green day, first red day, then inside day, and then day three breakout traders. Breakout traders, which most of okay is different. The three breakout traders, I may look for higher closes, three higher closes or three lower closes, because sometimes you might have three higher closes as an inside day without the three without breakout traders being triggered in. So I'll just put it separately. And then yeah, those are usually what I look for whenever I go to the market. I will look whether it's a first green day, a first red day, inside day, day three of breakout traders, three higher closes, or three lower closes. Uh, for those who are not familiar, I'll just explain them in a few. So let's say we have let me use the lines on Monday. I just have there just an entire week basically. So you can have Monday. Okay, let me remove this one. So you can have Monday, Tuesday, Wednesday, Thursday. Okay, let me add the last one to the side. Friday. Let me remove this one. So Monday, Tuesday, Wednesday, Thursday, and Friday. So basically, what I mean by first green day is a market that has been going down. Let's say this is on Monday, probably on Tuesday, and then let's just say maybe on Wednesday we again go down, and then on Thursday we might push down, and then we end up closing above the opening price. So on Thursday we opened here, opening price, and then we closed here. So we closed above the opening price with a false break at the low of Thursday. That is the first green day on my side. And then basically the opposite, sorry, the vice versa is true for the first trade day. Let me remove these ones. So the vice versa is true for the first trade day. So for the first trade day, we might just be having a push, another push, breakout, closing below the opening price. This becomes first trade day. So opening price, closing price. We've closed below the opening price. So the following day, I may be looking for selling opportunities if it presents. And then for the first green day, I'd be looking for, after closing, let's say opening price, closing price, I'd be looking for a buying opportunity if it presents. So those are basically what I mean when I say first green day, first red day. And then actually, if I just bring again the lines, I talk about inside days. So let's just say we have the days here, another day there, another day there. And then let's say this on Monday, this day to this day market just trades this way, and then it gives us the high of that day and the low of that day. And then the following day, the market just stays inside that range. Then this day becomes inside day. Why? Because it is inside the previous day's high and the previous day's low. So all I do, I just extend the previous levels, and then I also extend that inside these high and lows. So I may be looking for maybe a false break to know buyers have been triggered in, and then we shift to the other side. Trap, and then we shift. Or we trigger sellers, trap, and then we shift. So those are technically what I usually look for fast green inside day. Day three of breakout traders is just breakout traders being triggered in for 3 consecutive days. Or it may not be consecutive days, but no, a day level, isn't it? Let me show you something like this. You might have let's say Monday, Tuesday, Wednesday, Thursday, Friday. Okay. So on Monday we have a high and a low, and then there. On Tuesday we break and maybe close there, and then on Wednesday, and then probably on Thursday. So the first breakout traders were triggered in here, and then the second breakout traders, and then the third. So most of the time they might decide and trigger in the fourth breakout traders, give a lower low, pump, or a down, back down. That's usually what I look for sometimes, but it basically just depends on how the setup, the setup presents itself. So yeah, the same is the same concept also going downwards, where sellers might be triggered in for those consecutive days, like 3 consecutive days. So yeah. Three higher closes just means the market is closing higher for 3 consecutive days. Not consecutive, but we might have a rest, like what happened on gold this week. I'll talk about it. So let's say this is a day one, so we have that range, something like this, probably. And then the following day we open here, and then the market closes somewhere there. And then the following day we open there, the market trades, and then we close somewhere there. Then the following day we might have even a rest day down, and then we again close higher. So it gives us three higher closes. First higher close, second higher close, a rest, and then a third higher close. Then we might be looking for a selling opportunity from the highest closing price. The same might apply for also the bearish scenario going downwards. So anyway, that's basically everything I do look for in a market when I come to the week. And I just want to talk about a few things concerning traders who use the Stacy bar concepts. Is that most of them have come to realize that they overcomplicate things. You need to understand that the moment you expose yourself to a lot of information, you also expose yourself to a lot of analysis paralysis. Okay, because once you have a lot of knowledge, you might come to the charts and then you see one thing and then you think, okay, it's a buy, and then all of a sudden you see something else, you're like, wait, pause, hold on, what if, and then you start introducing a lot of what ifs, and so it causes analysis paralysis. And that's why you find traders having, let's say, this a day, and then they come the following day and they start counting peak formations, 3 pushes today. I don't know, they love, I don't know, gap time, and then I don't know what, and then again 3 pushes, 1 2, all these. And I'll show you guys something. This is what happened on gold day this previous week, the week that just ended yesterday on Friday. Is that you see people are there counting pushes and pushes, but the market is just creeping with nothing happening. Understand? So let me delete this one. So people are busy counting those small pushes here. You look at this and all you're seeing here is just creeping trends. Understand? And so people are inside this box trying to count pushes. Every little pushes, minute details. Push, a push, a push, a push. And so you end up being caught on this choppy move, complicating simple things. And that is I always do say, oh sorry, try and keep your so try and keep your trading as simple as possible. Stop complicating things. Understand? Stop coming in with minute details of pushes and pushes and pushes and pushes. Keep it as simple as possible. Okay, enough talk. So we can look at gold. So the week started here on Monday. I am using this indicator. I don't know what's the name. How is it being called? How is it called? We only use two, weekly and daily separators. The reason why I use it because it also helps me to mark the monthly separators, the red. So as you can see here, the red are monthly separators, and then the black are weekly separators. Why can't I see the red one for May? May, April, okay, April and then May here. Yeah, yeah. So the red is the monthly and then the black is the weekly. So when I come, I can just tell you have maybe the closing price of the week. So it just makes things simpler for me to mark out because all I'm doing is marking out. But even without the indicators, I can just still come and mark them out. I don't even need the indicators because these are things you can just draw with lines. And then the another one I use is the sessions indicators, which I usually hide hidden it in a 1 hour time frame because I don't need it on the 1 hour time frame. But when I go down the 15, as you can see, it's there. So I've only marked, for instance, New York at my time where I am Eastern African time. It starts at 15 to 18 to 18. Oh, I gave it 15 extra minutes up to 18:15. Just 3 hours is enough, you know. Yeah. So normally what I do is I go on the 1 hour time frame and then I just mark previous week's level just to know are we still inside the previous week's range or have we broken out? So that's the first thing I do on a Monday. And as I can see also the previous week was the highest closing price of the month of June. So yeah. And then the previous week also closed as a breakout from the other week. So those are just things you keep in mind as you head into the week. And the reason I like this is because these are not subjective things. You understand? These are objective things. If you look at your chart, I look at my chart, somebody else looks at their chart. The previous week's high is the same previous week's high. Nothing changes. Maybe you might have a little minor detail changes depending on the broker, but is mostly usually around the same level. And so these are no subjective things that you have to think about. There's nothing to think about when you're marking previous week's high and previous week's low. And that is how your trading should be. Easy, simple, repeatable. Something you don't have to think, you don't have to be smart, you don't have to have an IQ of 140, 150 for you to mark those levels. These are things you just see. And so when I come on the week, I can see that we are bullish the previous week, trigger in buyers are being triggered in. And then on a Friday, we closed in breakout. And one thing I did add on that list, I did not add, oh, sorry, I raised it. But whenever I see a market that closes in breakout at the weekly high or low, at the monthly high or low, or in respect to previous days levels, it's usually in my watch list. And that is why for gold, it was on my watch list on Monday because we closed in breakout. And so I just marked that level, that highest closing price from Friday, that was 13th of June. And then what happened on Monday? On Monday, I just hide so I can see the candlestick a little bit clearer. Okay. On Monday, we pushed above Friday's high around this level here. And then we immediately pulled back inside and the market just continued lower. Now, what happens is that I was looking for a sell from that level if it presented, that is, if maybe it went down, went back for a low hanging fruit measured move, which I didn't see. It just continued, sorry, it just continued creeping downwards. Why can't I? Okay, it just continued creeping downwards, and I don't know if there were traders who caught it during Asia because I only trade New York session. Asia is like 3 a.m. at my place, 3 a.m. to 6 a.m. And then London is from 9 to 12. So I normally just trade New York because one, when I come at New York, the market has played out. And so I have the bigger picture of the day. So I don't know if there were traders who positioned themselves for a low hanging fruit at this level, then they would have gotten something, which I didn't execute any trade on Monday for me on gold because I didn't find a setup that fit me. But if you go down, what the market did was You just mark the previous day's high, the closing price. The market broke lower. The market gave us the low of London somewhere there. Let me just use a trend line. The low of London there, and then the market gave us that high of London. And then what the market did was the market coiled on the first hour. So I can just mark on the 5 minute time frame. Then you can just scroll back. Yeah, and I'll tell you guys, I did not execute this trade from my own end. So the market coiled, and then what I normally do when I look for entries is that I mark the first hour high, which was somewhere here. Let me use the red, and the first hour low, because I never take trades on the first hour. And so what we are looking for a low hanging fruit sell from what? The move that started during Asia after we broke above Friday's high, pulled back and broke below the highest closing price of the previous week, or of the in fact the monthly highest closing price. And so when I mark these levels, I come to the second hour, which begins somewhere around here with this candlestick. And so I will only execute a trade one if we have a coil, such a coil, and then an engulfment of that level, of that red line. This red line is the first hour's low, and the upper one is the first hour's high. So if there are people who took this trade, they probably took this trade from this level here upon the engulfment of that red line. That is how I take my trades. Or like I see, starters usually start somewhere here. Like I think I saw Stacy back, he took it from somewhere here. But for me, normally I take it upon on the engulfment of a hourly high or low, or a session low, like this purple line down here. So that was a trade. I think some people took it in the community. I'm not sure. But yeah, for those who took it, really, really nice trade. And coming back, you take it till close, like Stacy Back says. But anyway, so coming on Tuesday, I can see that now we have what we call a fast trade day on Monday. And then, as you can see, we did not still break a daily level. We actually broke the high, so technically buyers were triggered in and then they were trapped. And so when I came on Tuesday, it was a fast trade day, but the moment we had this pin buy over here, this hammer at the low of Monday. I was like, no, no. And there's a reason for that. It's because whenever I have a fast trade day or a fast green day, I normally don't want to see traders being triggered in earlier. And the reason is because when you have such a thing, this pin over here, where the market just pins down a level. Let me mark. Let me get rid of this. This was Monday's low. And you can see with the pin down, triggered sellers, and then they pulled back. They again came down one more time and then pulled back. When I see such things, I normally don't like, because I feel like sellers are already triggered in. And I don't like it when traders are already triggered in on the direction that I want to go to. Because what I normally like is a trap and then a shift. Not traders being triggered in and then they are trapped and then I want to get in the market in the same direction of the trapped traders. And if traders are to be triggered in the direction I want to go to, then let us be below that level, so that I may be sure that now that market is being driven by those traders. And so that is why I did not take a look at gold on Tuesday. And I like to say this: sometimes the more you become strict with what you're looking for or what you're aiming for, you will realize that at times, like Stacy always says, you'll be missing trades. But as long as you know what you're looking for, you won't count them as missed trades. You just say they did not present. So you have not missed those trades. They just did not give you what you are looking for. Because it was a fast trade, I wanted the sales. I think Stacy Back took it, or I'm not sure. The sell. But for me, it was not a sell setup, that the kind of trade that I wanted. And so when I come on Wednesday, this is still on gold. And now this is usually the beauty of having a basket of instruments. Because you see now on Monday, I did not execute on gold, same on Tuesday. But there are other instruments that I'm also following: NASDAQ, US 30, oil. And so you realize that one of those might end up giving you trades on the day that gold doesn't give you. And so when you have a basket of instruments, you don't confine yourself to a single instrument where you join to force trades. And so when I come on Wednesday, let me again just clear everything. Here's on Wednesday. So on Tuesday, we actually had a first green day, but the first green day was not valid because we were just breaking daily lows, meaning we are still forming lower lows. And so if you are trying to buy this move, it's like you're trying to catch a falling knife. This is a market that is being driven yet by higher time frame sellers. And so the market creeps down, and then on Wednesday, we again broke the daily level. And then on Thursday, we broke again the daily level, and then we pulled back inside. And what I did was I just marked the Wednesday's low, and I marked Thursday's low. And I told you guys, whenever a market closes in breakout, you have it on your watch list. Whenever we have three lower closes, we have it on my watch list. The first lower close on Monday, and then on Tuesday we had a rest. That's the way I told you guys. And then we had a lower close on Wednesday here, and then we had another lower close on Thursday. So what are we looking for? We are looking for reversal trade. And that is why I told you guys, I like trap and shift. And so when I said I'm coming to look for reversals, and then I show up on Friday and I notice that during Asia, they pinned the low and triggered sellers. Now this market was now on my watch list, fullest, in fact at the top, because now I've said, you know what, sellers have been triggered in and I want buys. So I want to see them being trapped and then the market shifting to the opposite direction. As simple as that. I only take trades, or I like taking trades when I see traders that are trapped. And so when we pin down during Asia and triggered sellers, and then the market came down one more time, even breaking lower, people are now adding to their sales before the market pulled back, and we have what we call a change of character or a break in structure. And then the market pinned down one more time for a dump, heading into the 12 candle window. That was the dump, heading into the 12 candle window. I just got down on the 5-minute time frame, and as I said, I never execute trades on the first hour. I let the market play out for the first hour, and then I come and I mark the first hour high and the first hour low. And what does the market do? The market dumps, the market coils for a while at the low before the market pulls back and then gals the hourly level that I told you, hourly high. And then entry, you take your entry there. Stop loss, my stop loss is always 1 bar stop. I never exceed 1 bar. And if it exceeds, it will never exceed 25 or 30 pips. So I might maximum of 30. So 1 bar stop, 25 pips. You see, not even most of the time is not even 1 bar stop, because sometimes the candlestick will always be so huge. But I always do believe if you are in the right trade, it should just accelerate in the direction. And that is why my stop loss is usually 25 pips or maximum 30. And then you aim for the other range. So it is they triggered sellers, they trapped, and then they shifted. Trap, shift. Those are the only things I look for. And that is why this trade was on my watch list on a Friday. Now, US30 was another pair. I executed a really, really good trade. So where did the week start? Let me mark. So US30, when I came here was on Monday. I noticed that on Friday the previous week we broke Thursday's low and then we closed in breakout. We closed in breakout here. We closed in breakout. And so what I did was I just marked that level across as my point of reference. Easy, just something like that. And then on Monday, we had they triggered in sellers here at the low, and then they pulled back inside for the first green day. And then we marked that level, and then we marked that level at the low. Let me hide this so I can see where it got. Okay, here. Yeah, mark that level. On Tuesday, we had an inside day. And as I told you guys, inside days are markets on my watch list. So this red line is the lowest closing price of the other week, 13th of June. And then on Tuesday was an inside day. I mark that level and I mark the lower level, the low of Tuesday. So we have the high of Tuesday, the low of Tuesday, and the lowest closing price of the previous week. This red line. And as I told you, whenever I have an inside day, I want to see a breakout here, triggering traders, and then a trap and a shift, or a breakout to the upside to trigger buyers, and then a shift downwards. So when I came to the market on Wednesday, and I saw the market had broken out of Tuesday's low, I knew sellers were triggered in. And so, since I have this level marked across this red line as last week's lowest closing price, and I was looking for a shift from that level, I now knew sellers were trapped. And so, I'm looking for a trade to the opposite direction. And so, we have the London high. And so, as I always tell you, it's just the same thing, rinse and repeat. Pump, coil, dump. Dump, coil, pump. And so when I come during New York, I just mark the first hour high. I never execute trades on the first hour. So I mark the first hour high and the first hour low. And you can see the market, that entire first hour, the market gave us this pin. Let me mark it. The market gave us where is it? Okay. The market gave us this pin and this pin. And then we just consolidated inside. And then at 16:30 New York open. And then at New York open, let me just control. Yeah. So we have the first hour high, a minute, okay, and the first hour low. And so we just stayed inside that first hour high and first hour low. And then at New York open, this white candlestick, the market pinned down to the lowest closing price of the previous week. And this to me was a sign that let me now wait for a buy entry. And then the market engulfed that candlestick. And then the market again came down one more time and tried to pin the low of the first hour. Another engulfment that now engulfs the first hour high here. So that is my entry. And as I told you guys, entry, stop, TP. Entry was there, which unfortunately my broker failed me. These brokers, man. I can remember I pressed the buy button and they failed me somewhere here. I won't forget it. I was somewhere here the moment it closed, and then I pressed buy and then they failed me there at the top. but stop loss was still 25 pips there, 25 pips, and then you head to the other end of the range. And so when you get to a level, another thing is about trade management. When you get to a level and then you see this kind of behavior, the market pinning that level is telling you the momentum is coming to an end. So you behave accordingly. But that was the trade. Dump, breaking structure, dump, coil, pump. So keep your trading as simple as possible. Since I don't have that much time, those are some of the trades I've managed to go through them. But it's the same thing for each and every trade. Keep your system or your methodology or your way of trading simple so that you can replicate it, you can reproduce it, and you can repeat it over and over again without analysis paralysis. One of the mistakes that I always used to make was overcomplicating things. I would always come in a day and then I would start now counting things like these. Things like, okay, peak formation low, first push, second push, third push. I don't know, peak formation high, market across, the pull down, one, two, three, change of character. You see, I was complicating a lot of things instead of zooming out and just seeing the bigger picture, what higher time frame traders are moving that market, and how can you take part in what? In the movement to make your money. We are here to make money. We are not here to be smart. If you're smart, that's good, well and good for you. I'm not that smart. So I have to ensure I keep my training system, my methodology as simple as possible. Thank you. God bless you. And I wish you guys all the best.